Japan is getting a lot of attention from investors. Foreigners bought about $13 billion worth of Japanese stocks in January, the seventh highest monthly amount since 1982. In February, the Nikkei 225 hit a record peak not seen in over 3 decades. So why are global investors having a yen for Japan? And will the country continue to outperform this year? I'm meeting Standard Chartered's Yap Fook Hien to find out if the rollout of corporate reforms that will help companies become structurally neat and tidy, like this garden, is also a good thing for the stock markets. Fook Hien, it's good to see you today.
Thank you. Thanks for having me.
So what's going on with the Nikkei 225 and this rally? Talk us through some of the factors that are sort of playing into this rally that we're seeing.
We think that Japan is attractive. Valuation is attractive, relatively attractive, especially compared to US equities. Now, it has been inexpensive for a long time, and arguably why now? But what we're seeing about now is that the corporate governance improvements are really enticing investors. So in order to manage their share price higher, we saw share buybacks being announced, we saw dividends being increased, and this is really acting on behalf of shareholders.
Many investors have already benefited from this rally on the Nikkei. Warren Buffett as well made some major moves last year. Is it too late for an investor to get in now?
So far, we do not see signs yet that it is too crowded. I mean, about a month ago, we took down the level of overweight that we have within the US and global equities because we saw that positioning was a bit crowded. For Japan, we haven't seen that yet, and we do think that Japan can do better than cash for the next 6 to 12 months.
Despite the strong market performance, Japan's overall economy has continued to struggle. Growth unexpectedly shrank in the last 3 months of 2023, pushing the country into recession. Will any of those bigger economic factors play into what we're seeing in terms of the performance on the Nikkei?
Japan, we had the lost decade for a long time. We've had negative interest rates for a long time. Monetary policy has been very loose for a long time. And the Bank of Japan itself is very, very cautious before they tighten monetary policy. And the fact that we had a technical recession at the end of last year, I mean, that also plays into the factor and likely will slow down any potential tightening in monetary policy. So that is all in there. But like what the market thinks, we think that Japan, it's momentously, I mean, it's exiting a deflation era. It's going into inflation, and that's going to be positive for corporate profits, for profits to grow. So that is the regime change, if you like. It's going to be positive for Japan.
When it comes to risks for investors, you've got to navigate your way. Tell us what the biggest ones for investors might be.
For Japan, about 50% of their revenue is outside of Japan. So it is exposed to countries like China, where we're still seeing, we're still waiting more growth stabilization. We expect that will come, but if we do get weaker than expected growth in China, that is a risk. I mean, in the US, the narrative seems to have moved on now in terms of people are expecting pretty much a soft landing. But there are some out there who still think that elevated interest rates mean that there's a lag effect on the economy. And if the economy slows down significantly, again, that will have an impact on Japan. Within Japan itself, the Bank of Japan, if we do expect them to be tightening monetary policy sometime over the next year, bear in mind that they have been buying ETFs, which are the stock markets. And once they give any hint of how they might unwind some of their holdings, again, the market is very forward-looking. Depends on how they communicate it and the extent and the pace of any ETF selling. But it's the timing of that will be important to see.
Another risk to the Japanese markets is the yen. The weak Japanese currency has boosted corporate profits, especially for exporters. However, a weak yen could also be a double-edged sword.
One of the risks, of course, is the Japanese yen. If it continues to weaken, the investment converting back to SGD will be lesser. Right? So this is also a risk that investors may need to look into in terms of the currency exposure.
So we think the yen is quite cheap. It has room to go up by maybe 10, 15%, depending on what the BOJ does, which way interest rates go. But even at 10% higher, the yen is still going to be pretty cheap, and so that shouldn't have a very large or disruptive effect on stock markets, and it just adds to returns that global investors will get from investing in Japanese equities. The FX component should help, is our view.
For someone who might be a first-time investor in Japan, Fook-Yen, let's say they have $5,000, $10,000 and they want to get in, can you give us some advice as to what they should be keeping in mind?
Yeah, I mean, to access the Japanese equity market, obviously you can have very low-cost index funds, or ETFs, we call it. In terms of funds out there, there's a variety of funds as well in Japan. This will be professionally managed, and what you get is a diversified portfolio. And if you want to do single stocks, then you've got to do quite a few of them in order to be diversified.
Fook-Yen, what sectors should they be focusing on, and maybe even which ones should they avoid?
Yeah, we don't actually have house views on the sectors, but if you look at Japan, I mean, industrials is the biggest sector. More than 20% of the index is industrials. And if monetary policy will normalize, we're going to see interest rates rise there. That's going to be a benefit for financials. A lot of these banks are still trading below 1x book value. So that is good value. Within the tech sector, semiconductors, and I mean, AI investments is a global theme. And we think they'll be beneficial for some of these companies within the tech sector on the hardware, semiconductor side of things. And then within industrials, we see some of these companies involved in sensors, automation and measurements, which are good value, and I think they are doing well, and some of these companies will benefit as well.